Futures in and of itself is offering like 10 to 20 times leverage. Okay, so that leverage thing can work like a double-edged sword. It can work for you, it can work against you, right? And when you trade too much to be comfortable, the fear factor, the self-doubt, and things like that will start sipping in. And that's part of human psychological makeup, and it cannot be avoided. So the best thing is to not get to the point where you start having these thoughts. Okay, and obviously that will bring us to the next point: the failure to control risk from over trading, from not having the discipline to observe your own trading plan, your stop loss, for example, your exit point, your entry point, and stuff like that. And generally speaking, even with the best layout plan in the world, if you do not have the discipline to follow through, it is useless. Okay, so now back to the same slides again. It is a fact that a majority of people who trade futures actually loses money, up to about 90%. So why will we bother doing that then? Well, it is actually our experience that shown us that this actually, with proper training and guidance, a trader can be molded into 10% minority. Now that is possible because from our own personal experience, we have employed traders over the years, and we have trained traders over the years, and we see them, well, definitely not 100% of them, but majority of them managed to get to a better place from where before they began with us. So we are actually very encouraged with that outcome, and we think it's something definitely doable. Okay, then I want to talk a little bit about the major theme of our masterclass. We are going to introduce something called future spread trading. Some of you are already familiar with spread trading, but in any case, for those who are less familiar, I'm just going to go through quickly. Now, a spread is a simultaneous purchase and sale of one or more offsetting futures. Basically, you have a long and a short position. It can be in the same contract in different months, or it can be in different contracts, depending on how you set it up. Now, why would we want to do that? Now, because in a spread setup, you basically lower risk considerably. Meaning, for example, if you do a similar products spread, for example, let's say if you take a commodity, palm oil, for example, if you're long one month and you're short the other, your long and short exposure are essentially still in the same space, except they have different expirations. So the risk profile is different, but at least you are shielded somewhat from a systemic risk or overnight collapse, that kind of thing. And the other advantage to be had in the spread trading, for example, is a lower margin requirement. It's approximately 1/3 margin to trade a spread than to trade an outright, okay? And obviously, spreads also offer an alternative way of trading and taking advantage of relative value diversion. You know how futures market, in sometimes the flow will dictate certain direction for a short while. So that actually causes crack in a relative value valuation, and that is a way we can trade it in terms of spread by taking advantage of that kind of short-term disturbance in the market, so to speak. Now, there is another way to look at it in terms of spread as well when we talk about seasonal trends. Not just commodity, there are a lot of things that actually follow a certain cyclical kind of rhythm. And obviously, we need to read up and we need to test it. But this type of spread does exist, and for us to actually take advantage of it, a spread will actually offer a low risk, high probability kind of turnout. Obviously, the last one is self-explanatory. It's basically represent a lower kind of risk directional bet. You can bet on the spread like you're betting on an outright. Basically, if you buy and you hope the spread will go up higher, for example, or you sell vice versa, you hope the spread would actually go narrow. Now, in short, trading spread just offer a lot more way to play the futures market. Okay, let me illustrate quickly. Think of it this way, all right? When you buy a spread, you are basically holding a view that the spread will be widening. Say, for example, you look at the spread right now, the near month rises and the far month fall. Basically, the spread will be tearing, as we call it, so it widens. So if you bought it when it's narrower, you will be able to exit at a profit. Okay, and scenario two, the other way that you'll be profitable is when the near month rises, for example, when you're long the spread, you're long the near month, for example, and the far month rises as well, but not as much as the near month. So your long leg is still generating a net profit for you versus the far month. Okay, and the third scenario, for example, when both months fall, but for example, if the far month falls more than the front month, you essentially will still be in a profitable position for your long spread. Now, if we look at the other side of the equation, the sell spread, for example. Okay, now if you are sell spread, let's say we for illustration, let's say we short the front and long the back months. Okay, so what happens here, if the front months fall and the far month rises, you will be profitable because the spread essentially narrows, and that's what you're gunning on. From a wider spread, you are actually hoping the spread will be narrowing from the point on. Okay, another situation where you'll be profitable is when both months fall, but the front month falls a lot more than the far month. So in this case, the spread also narrows, and you will be profitable if you're in a short spread position. And finally, if both month rises, but the far month rises a lot more than the front month, so essentially again a narrowing of the spread from your short position, short initial position, you will still be profitable at the end of the day. Okay, so now spread doesn't mean it has to be similar product. What I meant is, like earlier I gave you an example of a palm oil spread in different expiration. Okay, a spread can be intermarket spread, interproduct spread, or intra-product spread even. So there are lots and lots of spread combination possible. Now during our class, we will talk a lot about not just the spread itself. Maybe I should mention, what we are trying to do here is not providing a magical solution or magic formula for you to immediately go out to the market and trade profitably. What we actually advocate to do is actually to teach you to fish. So to do that, we actually start with telling you and sharing with you our selection process from our stage of planning. Our selection process, how did we come out with the idea of this? Why do we match these two as a spread, for example? How we formulate it, and then how do we go and test it, validate it, and then we try to tweak it for better performance, and until a point where we were finally able to deploy into the real life market to trade it, hopefully with some consistency and profitability. So in all, you'll be learning from the start for a blank sheet of paper to the point where we actually develop and deploy a spread. Okay, now on top of that, obviously there are many dimensions to a spread analysis type trade. Okay, not just technical. Technical is one area of it. I'm not going to touch on it there, but there are a lot of interesting areas and points that you can actually start looking at. For example, one of the analysis we do is a premium and discount analysis, where we do look at the interest rate differential of the various offshore currency market to determine how it affects a valuation on a certain asset class and what should be dictating the fair value, for example, and if it's actually currently on, off, or above or below the current fair value to determine a particular type trade, whether we want to go long, go short, at what level, and what's our exit point, for example, using that as a basis. And earlier we talked about seasonality, okay, and the recurring nature of certain market type and certain spread type. And we will be actually introducing to our class what we have been observing over the years, what we've been trading on a recurring basis, and what we think will continue to be consistent in a sense. So we will try to take advantage of that in terms of timing, in terms of the flow type, and the time of the trade, or the time of the cycle, for example, to basically determine our entry and exit for that trade type. Yeah. Okay, and this is another view of the seasonality analysis. This is by coincidentally is actually a palm oil representation of the spot month. It basically just tells us where the likelihood of a increased month over month of price or decreased month over month on that particular contract. But this is just basically, like I said, one consideration, and it hardly forms the basis of a trade decision. Okay, so in essence, these are things that we look at in collaboration with other considerations before we formulate a certain strategy, a certain decision time. And these are the things that we'll be talking about in our class, and we'll be teaching in our class how to look for. Okay, flow analysis is another thing that we look at. We basically try to take advantage of institutional type flows, and then basically we are trying to lean on the side of basically where the master is in the so to speak. So basically what we are saying is we want to take advantage of the flow. So it pays for us to pay attention to how the flow happened, when it happened, where it happened, and in what way will it unfold itself. So all this is taken into consideration, and we try to take our advantage of when we actually trade those types of spreads. Okay, so before I hand you over to Andy again about when he will elaborate on the course outline for our trading masterclass, I want to let you know that basically what I have spoken about so far is basically ways we have been trying to gain an edge onto our trading decision making. So that's what we try to teach our students as well over the course of the class. Okay, Andy, would you be?
All right, thanks, Mike. Yeah, sorry guys, but we really have to go through very quickly because I think there are other things that we need to share with you guys about. Let me start with this. As what Mike has mentioned earlier, I think what's most important is we do want to fish for you. We want to teach you how to fish. So it's from the moment where how you set up your trades, come up with ideas, and you execute it from there, how you do your back testing and all these things. So there are certain fundamentals that we will cover during our class. So things like when you enter your equity index, you will cover things like your valuation, how it applies, the market microstructure, the flow, and things like that. And then how you trade, what is the fair value for your calendar spread and stuff like that. On top of the equities, we also will cover your commodities, where you learn about the flow analysis, what are the calendar spreads that we look at, the term structure, and then we also cover things like the inter-commodity spreads. Like you do your soybean against your soy meal. So that is just like one of the spreads. How do we come about doing this? What's the reason behind this? Why are we trading this particular spread? So all this will be covered during the 2 days with case study. All right. And part of our course, which we find very, very useful, is you knowing the fundamental is just one thing, but how you actually set up your trading terminal on how you actually trade this spread. Because like what Mike was saying earlier, doing a spread means you're doing a simultaneous buying and selling. It will be crazy to try to execute both legs, different exchanges by clicking, buy one, sell the other, and then where you're going to get your price from. So we will teach you how you set up on your trading terminal, how you use your ratio, and what is it to calculate per tick, per point is how much equivalent, and all these things. All this will be covered on day 3 and day 4. All right. So you spend time, you spend 2 days in our office. We walk through with you on the setup. And during this time, I'm sure you guys, you still have a lot of questions on what you covered on the 2 days of intensive theory. So that's the time for that you can actually throw us questions again, elaborate, show you the live examples of certain of our strategy that we actually trade. All right. We suggest 3 to 4 the day 3 and day 4, which is 2 days. But of course, if you do have time and if you do plan to go into full-time trading, I do strongly recommend to sign up for the 1 month that you spend in the office with us. This is the 2 days is actually meant for those who it's a minimum, where if you already have a full-time job and you're just trying to learn something. But if you're thinking about doing it full-time, I would strongly advise you to spend the 1 month with us. All right, so this is the workshop fee that we are looking at. So for the 2 days, which what we mentioned earlier, I even have the date there. We're going to do the two days of theory on 27, 28 November, and the 2 days of practical will be on 1st and 2nd of December. And the fees will be $6,000. And for early bird sign up, you get $1,000 off. And the early bird ends on 19th of November. And of course, because we're in partnership with Phillip Futures, and if you're a client of Phillip Futures, you'll get another $500 off. So net, you only pay $4,500 for this 4 days. But like I said, for those of you who are seriously considering doing it full time, please go for the 1 month, and you spend the whole month of December in our office. and the total fees for that is 7,500. Same as you also get the early bird discount of $1,000 if you sign up before 19 November. And if you're a client of Phillip, you get $500 off. So your net cost will be 6,000 Sing dollars. All right. Yeah.
Okay, guys, I think Andy explained a lot about the outline and stuff like that, but I just want to summarily bring out another point. Now, in our experience when conducting classes and stuff like that and working with traders, one of the biggest hurdle from a classroom situation, a theoretical kind of presentation, to the ability to use it and deploy it in the market, that is actually the hardest hurdle for most traders to cross. Now, the thing is this, some of you may or may not be familiar with this, but the point is we wanted to show you from a theoretical perspective and how we can actually apply that in the real life market situation using simulated prices, of course. And that's where the hand-holding, the practical part of the class, is actually very, very important. Most of our participants actually came out saying that that would be the best part of the 4 days, actually, when they're actually trading in the market with us on the behind their back, urging them, teaching them, and answering their questions. So I kind of think this is actually the most important part of the course for our class, actually. Okay, Andy?
All right, thanks, Mike. So some of the perks that we are getting as a participants. So we are in partnership with TT Trading Technologies that we are using the system to trade. So for if you all just sign up with TT, you will get 1 month free. But TT is giving us 3 months for all the participants. So you get 1 month of simulation and 2 months of free access, and that is worth about $1,000. And on top of that, our other partners is Singapore Exchange. They are willing to give us competitive rates, as TMP members rate for some of the products, SIMSKI, the FTSE A50, FTSE Taiwan, rubber, and FX. So you will get to enjoy 1 year of lower clearing fees. And of course, with our partners, Phillip Futures, they'll be giving you favorable rates for your commission, which is at 50 cents per lot and 115 ringgit for your bursa. Of course, that's a minimum volume, and I'll leave that to Jane to explain that to you further. All right.
Okay. Now, before we go to the video.
Yeah.
You want to do the video?
Yeah. All right, so let me just share with you all a video clips on from our participants last year, 2 years ago, 2019.
Yep.
Yep. Okay. How do I play this? Yeah.
My name is Steve. I've been trading derivatives for almost 10 years.
Oh.
In the early days, I used to perform RM trades on the E-mini and the suite of NSCI indices listed in SGX. 5 years ago, I started to explore spread trading after reading some articles and books about that. I find spread trading suits my character better than the RM. Most of the time, it is also less volatile as compared to its underlying RM. And emotionally, it gives me time to see my trades develop. Most of my spread trades currently are on Cyclone Rubber, Bursa Malaysia crude palm oil, and the indices. Occasionally, I do trade the CME WTI crude and natural gas character spread involving seasonality.
Hello everyone, I'm Richard. Previously, as I had a full-time job, I only trade part-time in the stock market. It was not until I attended SLC workshop that I had since been trading full-time for the past 2 over years.
Hi, my name is Japan. Previously, I worked as a finance lead at Japan Tobacco International. I started trading on US market in stock, futures, and option. I joined the SLC workshop in December 2019 and have been spread trading Asia equities and commodities for the past 2 years.
2 years ago, I got to know about SLC conducting workshop from my friend Ken. At that time, Ken is already a proprietary trader with SLC.
I get to know about this workshop because my very good buddy Ken introduced me to SLC and their workshop.
I learned about the workshop from my buddy who's a full-time trader working at SLC, as he knew that I would like to embark on a new professional trading career.
It is quite rare for a proprietary trading firm to conduct a workshop with live trading sessions inside their facility. I do see this as a good opportunity to understand how real professionals trade. Besides that, I also believed in trading alongside successful traders will shorten the learning curve in bringing my trading to the next level. Without hesitation, I decided to join the workshop despite the hefty price tag.
I had wanted to be a full-time trader, but the challenge I faced was to find good guidance and good mentors. This workshop was taught by full-time proprietary traders whom themselves are trading for a living.
I find it a very rare opportunity to join a workshop and is structured by real-time experience proprietary trading company. And furthermore, it's about trading which you hardly find anyone would like to share. Also, the program covers 1 month simulation before your own decision to go live. All the asset class is very issue specific. So you work like a normal person, finish at 6 p.m. After 6 p.m., you can enjoy your private life.
It has been quite a while that SLC conducted a workshop. I'm glad to hear that they are going to run it again. I would strongly recommend the workshop to traders that are keen to explore further in spread trading and eventually build a trading business and career around it. However, if you are here to look for trade entry and exit signal, I think this course is just not the right one for you.
I attended their workshop in 2019. It gave me an insight as to how the professional traders trade, what they do, and how they think. One key highlight about the workshop that I really appreciate and helps me a lot in my trading is that beside the 4 days theory and practical lessons, I get to trade with them for a month. This really helps me a lot. As for me, only knowing theory isn't enough. With the 1 month trading in SLC trading room, whenever I had any questions or faced any issues, I would just ask them. They are very knowledgeable, helpful, and most importantly, willing to share.
The 2-day workshop is very specific as it provides fundamental of the asset class you are going to trade. And the 1 month simulation is very realistic for you to taste the ability and judge yourself if it's what you want as a career or others.
Perhaps more respect for risk and do not overtrade. All traders are different. Some have larger fund size, some have higher tolerance for risk, and some are more disciplined and adopted a tight stop loss strategy. Therefore, a trade plan that works for them may not be that applicable for you. This is especially true when you are trading in a group. To manage your own risk, you need to develop your own trading plan and execute it with discipline and conviction. Besides risk management, it is also very important to upgrade your knowledge to be ready for the always dynamic and evolving market.
Before attending the workshop, I would think that trading is only about making money. But actually, trading is more about consistency, risk management, and capital preservation. Not about hoping for a big windfall before losing it back to the market. As what Andy always says, it takes a lot of hard work and effort in order to succeed. Hard work, patience, management of risk, and having good guidance helped me in my trading.
Before I attend SLC workshop, my trading view is very complex and confusing. Depend very much on indicator and graph. My mindset always want to be on trade, so managing losing trade. As a result, losing money. The workshop will develop more consistent trading view. You will understand how to use fair value, smell the flow, and hopefully you get your own edge to trade to make money. Another important factor is you have the chance to trade in SLC, which you provide face-to-face coaching whenever you need and share ideas.
As mentioned earlier, I will strongly recommend the workshop to traders that are keen to explore further in spread trading and eventually build a trading career with it. Well, for most of us, don't expect to achieve excellent results overnight. Rome wasn't built in a day. You need to set the right expectation. During the workshop, try to learn as much as possible and build a good foundation in spread trading. If you are in doubt, always ask. I think the more you ask, the better you will learn. Finally, you should focus more on doing the right trades rather than focusing on counting your profit and loss.
So for those who are looking to trade for a living, I would recommend to attend this workshop. Not only you get to learn from the proprietary traders, you get to trade with them in their trading room too. An opportunity not to be missed.
This program is an opportunity for those who like to embark on a professional trading career like me. You need to manage like a startup businessman at the beginning part, require time and your mindset to build position size and manage risk. It is absolutely not a spoon-feed program. Your success is based on the judgment with support from SLC.
Yep.
Pass it back to Jane.
Oh, okay. Thanks, Jane. Back to you.
All right, Jane, I'm going to give you sharing rights so you can share your slides and let us know what kind of perks traders from the workshop can get. Jane, I'm going to give you sharing rights right now. Jane is also from Phillip Futures. She's our BD rep from the Professional Traders Desk. So if you have trading related questions and benefits of trading with Phillip Futures as a professional trader, just type your questions into the question box and whoever is relevant, either for ITS, Andy, Michael, or Jane, will get them to address them. All right, Jane, if you're all set to go, over to you.
Thank you, Sri. Hello, everyone. My name is Jane. I will be your main contact person for this professional trading masterclass. I'm pleased to inform you that this workshop is our second collaboration with ITS with support from SGX and TT. To recap, you will enjoy as a participant a low commission markup of 50 cents for SGX indices rubber and Sing dollars 50 cents for SGX Simski, 50 cents USD for CME products excluding the cryptocurrency, and 150 ringgit for the crude palm oil, with a low volume threshold requirement. So for the first 3 months, it's a minimum 100 lots, 4 to the 6 month minimum 300 lots, and 7 to the 12 month minimum 600 lots. Once you train by ITS, you will realize that such volume could be your weekly volume for a start before you progress to daily. That's how professional traders do it. Let me illustrate with an example for your cost of trade. If you trade Simski, you will be paying upfront $2.55, and this is the markup plus exchange clearing fee, and receiving a rebate of $1 which will be credited into your account in the following month after SGX sends us the rebate. In addition, SGX will be offering 6 + 6 month rebate on the SGX trading fee. And TT is extending 1 month simulation with 2 months live trading platform fee waiver. With this, you will be able to upgrading yourself to the professional trading arena. Further to the incentives mentioned above, ITS will also be offering you an early bird discount as a form of encouragement for your commitment to upgrade yourself to be the professional traders if you register by 19 November on Friday. And that is not all. You also will be receiving a discount of 500 if you are Phillip Futures customers. So no worries if you don't, and as accompanying is almost instantaneous. A gentle reminder that it's a limited seats are available. So to ensure everyone can get their trading session to practice, please book your seat as soon as possible to lock in this good deal. So if anything, you can call me or WhatsApp me at 6531-1543 or email to traders@phillip.com.sg. Do feel free to contact me, and if you need any assistance with this registration, account opening, you can contact me, and you also may reach out to the ITS if you have any queries relating to the workshop. Thank you once again for your attendance. Have a good evening.
All right, thank you so much, Jane, for the executive summary of the perks that traders from the Trading Masterclass workshop can receive. And all right, I believe we are on to the Q&A. Is that correct, Michael?
Yep, that's right.
All right, let me give you sharing rights so you can share your slides.
Sure.
There's a Q&A slide, and also I believe we have a QR code on that slide, correct?
That is correct, actually. There's a QR code and a link there. That's for the registration to the course in case you guys decided to sign up today for the early bird discount. So just scan and go.
Okay, in the meantime, if you have questions for Michael, Andy, or Jane, just go to the question box and type your questions in there, and we'll pick them up very short. For those who are all set to sign up for the training workshop, just scan the QR code or follow the bit.ly link, the short link that you see there, and register your interest for the workshop right now. Seats are limited. I believe we are having about 10 in a class for this year, so it's a very small group. We can't have too many. Pandemic is a reason as well, so you might want to sign up early to avoid disappointment. All right, so if you have any questions with regards to the workshop, now is a great time for you to ask. Okay, our first question is from Calvin. Calvin is asking, for the 4-day workshop, are all 4 days in the SLC office? Michael?
Yes, it is actually. The whole premise of this class is actually, like I mentioned earlier, the value add on this class is actually the hand-holding part with the current actively trading kind of traders. I mean, who are currently actively trading, basically. So you actually get the best of both worlds. I mean, in the theory sense, you get the idea of how we formulate what we do, and then we get to trade next to us, or rather we trade in front or behind you, rather, when you're doing the trading in simulation mode. So yes, it'll be in our office as well. We'll be providing all the equipment and stuff.
All right, next question is from Fabian. Fabian is asking, is this course suitable for complete newbies to futures trading?
Yes, actually. You know, in our experience, a lot of times, some of our students who are entirely new to futures trading or have some very little knowledge of futures trading or experience in that, actually come on a clear slate, for example, and they are very receptive of the ideas. Now, the ideas in and of itself is not complicated or rocket science kind of thing. It's rather understanding it, knowing where we come from, and then the methodology of how we apply it into the market. That's the important part, and which is why I keep reiterating that the hand-holding part is actually a very, very integral part of this whole class.
All right. Next up, we have a two-parter from Mahesh. Mahesh is asking, is this about only exchange traded spreads or synthetic with an auto spreader? That's the first question. Michael, do you want to address that first?
Okay, it's both actually. We we look at spread as basically like, for example, a simple spread will involve two legs. You can think of a spread as two individual contracts put together as a spread when we view it in the trade view. Now, however you want to execute this, be it on the calendar that's listed on the exchange, or be it as individual legs in the outrights. That really depends on the situation, which we will cover during the course, as to which is more advantageous to execute and how it can be executed in the best way possible to achieve a certain trading objective.
All right, so Mahesh's next question is, with TSR spread on SGX, one tick is $5, and even with SGX rebate and 0.5 per contract per side, the break even is almost $5 per spread. And this is just CQG desktop, no auto spreader. So with this break even, the spread has to move at least 4 to 5 ticks to make reasonable profits. What are your thoughts, Michael?
Okay, two parts. I'll let Andy answer the second part. First of all, you need to understand. Now, a spread trade is very different from an outright trade. Although it can be treated in somewhat similar way, when we are doing spread, what we are gunning for is a lower risk type trade type or setup. Okay, and we are not expecting a exponential move like you see in the cryptocurrency, for example. Not a not move, because you must understand the objective of approaching this using a spread is different. What we wanted to teach our students is basically to do something convincingly and consistently and hopefully profitably as well. So this is something that we want to be able to do for a long haul, and this is something that I've been doing day in, day out for the past I lost count of the number of years, but basically this is something that can be done over a long period of time consistently and with some profits. So now I'm going to defer the question about cost to Andy, but Mahesh, I believe you do not you did not get the cost number correct. Andy, perhaps to elaborate.
Yeah, as I mentioned earlier, you'll be getting some discount on your clearing fees. At the moment, it's 120 if you are just trading as the normal clearing fees. But like I mentioned, you'll be getting 50% discount on your clearing fee on the SGX rubber contract. So effectively, your cost will be 60 cents for clearing fees and 50 cents markup from from Phillip. So your total cost per site will be only 110, and you multiply the spread out of 4 legs, because you need to buy sell on when you enter a trade, and when you get out it's another buy sell. So total is 440 before GST. So it's definitely not 4 to 5 tick to get out. In fact, you probably make like 40 over cents just for the 1 tick difference. But of course, we are not going for the 1 tick. We are, it's, you know, there's definitely ways, and you can park your spread on the calendar, and sometimes you don't even get a trade. So the good thing about auto spreader is that you can leg your spread and you can get more trades done, as opposed to just parking your order on the calendar spread itself. All right.
Yes, Mahesh just responded. He said that his spread, his fixed cost 4 legs is around 44.50-ish.
Correct.
Yeah.
All right. Okay, Kelvin is asking. Kelvin is asking whether this course is suitable for professional traders or traders with some experience, or newbie or retail. Michael has addressed that, you know, especially if you come in with a clean slate in terms of how you're trading, you might be a lot more receptive to the strategies, and you could go on to be a successful trader yourself. Kelvin, you wanted the contact details for how you can get in touch with our reps to learn more about the course. I'm going to type it into the chat box as well for the rest of the audience, so you can pick it up from there. All right, any other questions? Okay, we just have one that came in from CJ. CJ is asking, one second, my eyesight is failing me. The window is quite small. Hi, why would one want to trade spreads when we can trade other instruments that also make money like indices, stocks, SIMSKI, crypto, etc.? What kind of profit and loss and return of investment are we looking at for adopting this strategy? So why spread trading, Michael?
Okay. Now, I already mentioned in the earlier slides the reason I favor trading spread. Now, spread is definitely not the only thing I trade, but I can tell you with a certainty that is a bulk of my daily trading. And the fact that I've been trading this for so many years and I'm still around trading it tells you at least one thing. It is possible to trade it profitably, at least consistently over the years. It's not that you cannot trade outright or you trade individual products, whatsoever. Our quest here is to actually teach our students a method, a way, an ideology of being able to trade for the long haul consistently and hopefully with sufficient return to last for the time to come. So the thing is not whether it can or cannot be traded or whether it's better or not to be traded. It really depends on how you want to approach trading. Of course, you can just purely do technical analysis and you go out and trade all the products that you want to look at. Now, the reason I elaborated about how a spread type setup, be it long or short, can turn out for you, for example. Now, it just offer an angle for which you can consider. Like, for example, if a market is, let's say, if any instrument at any one point in time could be going through a consolidation phase, and you have all this big break, for example, so you will be actually be only one way for you to make money. Let's say if you go long and outright, well, that's only for it to go up. But if you go short, there's only one way for you to make money. That's if it goes down. But it doesn't always have to work out. It doesn't always work out that way. And obviously, the risk of that inherent is needless to for me to elaborate further. Right now, what the spread type of trade type of setup offers is basically the ability to what filters some of this risk element out of the equation. And it is actually something that we've been doing for a long time to know that it can actually be consistent and repeatable. And that is what we hope to teach our students. We don't get me wrong. I mean, I hope our students are all profitable and all, and some of them really are. The thing is this: we wanted not to part way after one day of a big windfall kind of profit, and second day just suddenly wipe out. Like I said, we not only want to teach method, the strategy, we want to teach you our philosophy towards trading itself, how we manage trade as a professional trading firm, how we approach trading itself as professional traders. And we hope to see our students being able to mature in that sense. And spread is actually a very good starting point. Okay.
All right, thank you so much, Mike. Okay, we have two questions from Fabian and Jennifer. They're asking, are there alternative dates for the course? When is the next course after this one? Well, from memory, I remember the last time we did this was in 2019, was it?
Yeah, then COVID happened, you know. We have actually a lot of backlog and inquiries, but then it was not possible because this is something we consider. We were actually asked to do this online. Now, like I said, the biggest one of the biggest value add into this class, and I think it's a critically important part of this curriculum, is a hand-holding part. We absolutely need to sit behind the traders while they are actually trading simulation. We need to see how they behave, how they respond, and we can try to certainly correct certain bad habits that we deem are bad habits. For example, to save you the time and the pain of certain mistake that's totally avoidable. And I think this is the invaluable part where for participant wise to be able to sit in with us, someone who's trading it from on a day-to-day basis, for example, to tell you all these things. These are all invaluable experience that we learned the hard way. So it wasn't possible to do it online, so we deferred until now. I mean, but things are slightly opening up a little bit, and if possible, I would like to think the next class will probably be 3 to 6 months away. That's because we are still trading on a daily basis. All of our trainers are active traders, and we have our daily training obligations as well to the firm. So this is the time schedule that I think we can best squeeze out right now.
All right, Michael. We have a question from SEO. He's asking, is spread trading suitable for one who doesn't intend to do it full time and is considering the risk of the mark-to-market and holding position? What are your thoughts on this?
Oh, definitely. Like I said, if you approach a spread, part of a strategy, for example, is looking at spread as an outright. And what we are trying to do is basically gaining an edge. Well, sort of like a casino. How did a casino operate for so long? Basically, they have a slight edge over the players. So it didn't matter if the players keep winning or whatsoever. The important thing is that you will be able, like a casino, to be ever present when you need to do the trade, for example. Okay, you can have different types of setup. It doesn't mean that you have to trade in front of your screen day in, day out. We are doing it because there is an edge for us to be had, and we are trading on a full-time basis, and we just don't want to let the edge go to waste in a sense. So you can approach it in a different way. The methods are the same. It's a matter of approaching it. Your time frame, your consideration would be slightly different from one that would be trading it on a day-to-day basis.
All right, well, we have a question from YL. What sort of computer equipment do I need? Can I use a notebook? I see a 4-screen monitor set up in the background. Michael, would you like to share what kind of setup they will be using in your office for the trading?
Okay, for most of our students, we'll be setting them up with a 2-screen on the simulation phase. That would be sufficient to start you with. Whether you can work on a laptop, you definitely can. But for reasons that you will find out during the class, you will realize you will actually want a lot more display estates. Okay, basically, you would want to see more than your eyes can reach. Now, for most of us, on average, we have 8 to 10 screens. It's not that we must have it, but because we are invested in so many areas, we spread ourselves very wide. We cast a very broad net into the market so that we can actually better take advantage of the edge that we have and when the move happens, so to speak. So that's the purpose of having that many screens. It's not that we cannot flip to different windows or whatever. We can. We just don't want to lose the split second when we are doing the flipping. So it really depends on your objective and whatnot. But whether you can trade on a laptop, yeah, when I'm on vacation, I trade on a laptop sometimes.
All right, Mike. Okay, next question is from Kelvin. He's asking, where is the trading? Where's the training venue?
Okay, both the theoretical and the practical part of the class will be conducted on SLC premise. So basically, you'll be in our office. We'll be conducting the theory over 2 days, and then follow with the 2 days if you opt for the 2-day package. Practical hands-on, also in our office using live market data. And in the simulation mode, of course, there's no P&L consequence, but it's more for practice with the reality, with a reality of a live price kind of setup. We will be providing the equipment, obviously.
Okay, Wilson is asking, for spread trading, what's a decent amount of capital you should have before you begin?
Okay, we would actually, from our experience, we would advocate a starting capital of 50,000 Sing. Okay, it is not that we cannot do with lower, but in order for it to make sense of what we are doing and what we want to explore with you, that would actually be a good starting point. I mean, of course, if you can afford more, good. If you're comfortable, that's fine. But in our experience, we think 50K is a good point to start.
All right, we have some interesting questions. The next one is from CJ. CJ is asking, is there any support after the 2-day or 1-month workshop, like Facebook support group or regular refresher?
Okay, now for our past students, we will invite them back to our next class for refresher if there is capacity. Now, generally speaking, we keep in touch with our students. But of course, like I mentioned earlier, I don't want to over-commit and over-promise. We are, after all, full-time traders. So outside of our teaching time, we are trading full-time here in the office, at home, whatever. Of course, we will try our best to correspond with your student, answer all their questions. And of course, during the period of the course of the 4 days or the 1 month that you sign up, for example, you may not have been able to ask all the questions, or you may not have been able to think of all the questions that you have. We will try our very best to answer and help our students along the way, but just bear in mind, it may not be real time and WhatsApp type of chat group kind of support. But we certainly want to see our students succeed for all right reasons, obviously. So with that in mind, yes, we will definitely look to support our students in all their endeavors.
All right. Kelvin is asking, can he confirm that the venue of the training will be at in International Plaza, 10 Anderson Road?
That is correct.
That's your office address, right?
That is right.
All right. So in case you're wondering, the training is in a central location. It'll be easy to get to wherever you're working or wherever you're staying. It should be quite central and accessible for you to get to. So not a problem. There's a train station just outside. So no worries about getting there on time for each day of the trading workshop. Next is from Y is asking. YL is asking, capital gains are not taxed by IRS, so is the trader's income tax-free? So is that a good reason to be a trader?
No. You become a trader because you think it's a lucrative venture, something that you can do. Let's say if you want to do it full-time, something that you can do with some consistency. The whole point at the end of the day, be it you work for somebody or you work for yourself, that is the question that you should ask yourself. Okay, if you're confident enough after a class, for example, like some of our students, they've been trading full-time with us since, and some of them still hold certain job on the side. So you see, there are different approaches and how you want to get what you want to get out from this class itself. So either way is possible. It really depends on your comfort level and your ability to adapt to the new trading type of approach.
Okay. Any other questions with regards to trading or the workshop, or what are the key things you need to take note of before you get started? Any other questions, or do you have questions for Jane with regards to the actual costs for your trade? Or maybe do you have questions on the platform? We have a few more minutes. Just put them in the question box if you have any more of such questions. In the meantime, if you'd like to check out the landing page where you can find out more about the workshop and register your interest in the workshop, you can head to the chat box, not the question box, the chat box. I've placed the link in there, so you can click on it and visit the landing page right now. All right. All right, we have a few more questions. Mahesh is asking, okay, let me see if I get this right. Spread on Asian exchanges or US exchanges? Mike?
Okay, what about those? What
I'm
was the
thinking
question?
is spread trading on Asian exchanges or US exchanges? I'm thinking it's Asian based on what your student said in the video. I'll leave that for you to address.
You mean for what we will address during the class? Okay, predominantly we will be covering Asia indices this round. Now, like I said earlier, we are trying to teach you to fish. So the cross-border applicability still stands. It's an idea basically for you to understand how we came up with trading strategy in a certain way. How do we actually come up with this idea from formulation, testing, and until the deployment? So the whole point of it is to tell you how we got from here, point A to point Z, where we actually use it on a daily basis. So the same idea can actually be deployed in different markets, but we are using for the context of the class mostly Asian indices and those that Asian commodities as well, actually freely available in a sense. So we are using those actually more for illustrative purpose, but the like I said, it is fully applicable across border.
All right, we have a question from Kelvin. He's asking, will we touch on algo during the workshop?
We definitely will be touching on algo because it's part of the power of professional trading platform like trading technologies. Okay, it's an advantage that's not usually available to retail traders, and we would really like to show our students how best to take advantage of it in the way they want to set up, for example. So this will be part of what we'll be teaching as well.
Okay, we have a question from Fabian. He's asking, I mean, it's a very good question. How much do we have to pay for the platform and the required market data or software after 3 months of the complimentary usage once that is up?
Okay, now for trading technology platform, there are two type of model that you can work with. One is called a subscription model, where you pay a fixed fee of 1,500 US a month, and the other model is a transactional model where you pay by per lot trade, and obviously there is a cap on the upside. I believe it's 1,800 US at the moment. Now, the thing is, for most of our students, especially those who are new to trading futures, they start on a transactional model. The reason why it works better is at the beginning, where they are not so sure, they will likely be trading on a lower volume until they validate their trading idea, the trading strategy works for them before they are able to engage on a more confident and aggressive type of deployment of the strategy they have learned from the class. So usually our student starts with the transactional model. Like I said, it's US $500 a month, and the market data cost is depending on how many markets you will be subscribing to, depending on how many market you want to trade into. So individually, for different market, there are different costs, obviously. So on average, it's probably about $100 a market there, about on average.
All right, so if there are no more questions, we will end this session here. Michael, Andy, do you have anything else to touch on? Jane, anything else you wanna share?
Nope, we're all good.
Okay, just to recap, if you have any more queries, you can send them to Jane. Contact details are on the chat box. Just to recap, you can call or WhatsApp 6531-1543, or you can email traders, that is traders@phillip.com.sg. Okay, if you want to check out the Professional Trading Masterclass landing page, the link is on the chat box as well. You can click on the link and head to the landing page to learn more about the workshop as well as sign up. All right, seats are limited this time around, so please do register your interest to avoid disappointment. All right, Andy and Michael, if there's nothing else from you, we'll end this session today. Do look out for our follow-up email giving you more, if you need a recap of what was covered in the video, or you like the link to the registration page, we will send you in our follow-up email tomorrow. All right, meanwhile, take care, be safe, and goodbye.
All right, thanks guys, and thanks for joining us tonight. Take care.